What's up, guys? Welcome back to Roensch Capital Charts. Today we're taking a look at the ever so popular S&P 500 ETF SPY, ticker symbol SPY, on a variety of time frames in anticipation of the next trading day, Wednesday, February 14th. Well, SPY here today, finishing the day down $6.90 a share, 1.38%, actually getting away from being down approximately 2% at the worst point of today. Of course, this morning we got quite a bit hotter than expected CPI read. Covered that all on the show on the main Roensch Capital channel here tonight. But let's take a look at what we're always doing on this channel. Let's look at the charts. And let's start here with the 1 minute, okay? First of all, if you guys appreciate me covering SPY here each and every day, please let me know in the comments. I'd like to know if, this ETF in particular is one that you appreciate me covering, if you'd like to have me continue to do so in the coming days. Just quick, let me know. A thumbs up emoji, whatever. Helps out tremendously. Also appreciate you subscribing to the channel. Our goal is 1,000 subs in the next 10 to 14 days or so, and I think we can do that with your help. Thank you. Well, looking here at the 1 minute, you see this intraday. Okay, as far as intraday opportunity is concerned, we saw quite a widening out of this range, after that big pre-market move. And it left us here on SPY with not a whole lot of intraday opportunity, at least that has long-term statistical edge from a scalping perspective. We got this late day test. It was so sloppy. There was nothing to trade here, at least for me. If you caught a couple of trades, I'm happy for you. Hope you made money. For me today, nothing with edge. So let's move on here to the 5 minute and take a look at volume. Let's see what the biggest sample sizes that we can get, if we can pull any obvious bias out of the market. Okay, so we look here, and this immediate fall was actually on reasonable volume, actually in more volume than we saw for the majority of the middle of the day today in regular hours here in pre-market. That's a pretty big deal. Okay, but as far as the first 7/8 of the day, really not a lot to pull from. Not a ton of variation, at least obvious variation in terms of volume that correlates with movement in the ETF. But if we look here, we had this late day pump. Remember I said we were down over 2% at this point? We had this late day pump in the last 35-40 minutes of today's trading, and we saw a pretty substantial volume on that pump, which I can't really ignore. It looks like a decent sample size of the market agreed that the S&P didn't necessarily belong down 2% here today. So, on a day like today, to me, that's a reasonably good thing to see. Okay, let's take a look now from a day-to-day perspective at the more self-fulfilling prophecy psychological levels, starting with the 30 minute. We have to look at all the time frames to get a full contextual picture. Okay, but here on the 30 minute, you can see. So you see we have both the 50 period and the 200 period below $500 a share. That 50 period is approximately 0.5% away, and that 200 period is less than 1%, about 0.93% away. So listen here, from a bullish perspective here on the 30 minute, I want to see both of those reclaim ideally. That would put us very near $500 a share, if not back above, and reclaim those both as support. Okay, from a bearish perspective, if we see a retest, you'd ideally want to fade off the 50 period. If not, then the 200 period. But really, you'd want to see both of these curling downside. The 50 period will be a bit quicker, and closing that gap, adding psychological potential psychological resistance down further to the downside, right closer to where the stock currently is, to encourage further downside. That's if you're a bear. Okay, let's take a look now at the 4-hour chart. You can see that this 50 period is incredibly relevant right now. Currently, that 50 period sits right at about 496.35, 496.40-ish. So this 4-hour chart becomes very clear, okay? Because, we're looking at 0.4% from the current stock price. So listen, if I'm a bull, I want to see that reclaim easily tomorrow, ideally. Reclaim, even retest, rip up out of there as support, head toward $500 a share. And if I'm a bear, ideally, if we see a test, just reject as hard as possible, back downside off of that 50 period, potentially opening up a move down toward that 200 period here on the 4-hour. Understand that, here on SPY, it is an ETF. It's going to be especially vulnerable to macro events. Like, again, this morning we had CPI that moved everything around. Tomorrow we have a lineup of Fed speakers Okay, so keep an eye on those Fed speakers tomorrow. They could move things around in the context of the day after a CPI read like we got today. But let's focus on the charts here, because I think really, at the end of the day, whatever's moving the market, it all comes down to psychology. And that's what the charts are. Right? That's what this entire channel is. It's psychology. It's self-fulfilling prophecies. It's looking at the psychology of the market. Okay? That's how I look at TA. That's why I love TA, because it's real. And I'm not talking about, made up indicators that track things that aren't even that popular. I'm talking about bare bones charts, what everybody else is watching. That's real. Okay? It is the psychology visualized on a screen. So if we look here, let's zoom out now to the most important chart of all. That's going to be the daily. This chart here is one of the most popular charts on the planet. SPY on the daily with the 50-day and the 200-day moving average plastered on there. You have some volume, implied volatility. That's all you need, in my opinion. So you're looking here, and listen, this is really simple. Okay? If I'm a bear, let's start with the bears here. Your number one priority, do not give up $500 a share. It's a 1.2% upside move away. That's a pretty substantial move for the S&P, right? I mean, we had that downside today, but I mean, still, anything over 1% is a big move for the S&P 500. So if you're a bear, just do not give up 5. Ideally, break down below 490, head down toward that 50-day moving average. But if you're a bull, I mean, listen, despite the outside factors, despite the hot CPI, number one priority, just reclaim $500 a share. That's what you're watching realistically if you're a bull here. Implied volatility did spike a bit today. Understand that if you own options or you're currently looking to buy some options, you do run a potential slightly elevated risk of some future IV crush if we were to see IV continue to fall back down toward equilibrium of the recent trade time frame here compared to the last couple of months. Let's take a look at the options bias, okay? Because we got a ton of volume here on SPY today. 11.1 million contracts traded. We can get some great data out of there. 5.17 million of those were calls. 5.95 million of those were puts. So the overall call put ratio leaning slightly to the bearish side. The short-term speculators, the 0 to 20 delta, 1.78 million calls, 2.3 million puts, also leaning slightly bearish on the short-term speculation front. Okay, this is really interesting though. Look at this, the in the money, the 61 to 80 delta range, and the deep in the money, the 81 to 100 delta range. We almost always see that, because that's the mid to longer term bias. We almost always see these two leaning to the bullish side because it's the S&P 500, right? That actually flipped to the bearish side today, which I thought was really interesting. However, in the near future, I can't be so sure that I expect that to last, just because of how common it is to see the mid to longer term in the money contracts leaning bullish. So listen, as always, this is data. There's no opinion here in the options data, right? That's what the traders are saying today. And remember, they can be wrong. As always around here, manage your risk, stay in the game. Appreciate you guys. Appreciate you subscribing to the channel. Again, we're trying to hit 1,000. So thank you guys for watching, and I'll see you in the next one.